Hi everyone, this is Mike Kramer of Mock Capital. Today is Tuesday, July 16th. It's around 4 o'clock. The economic calendar, the rest of the week will be very quiet. Most of the big data points will come on Thursday when we get the jobless claims data. That's expected to come in at 230,000. Continuing claims will also be important because, again, people have been watching very closely the unemployment rate here in the U.S., and they're viewing any form of data they can get out of these initial claims as a potential indication of where we're likely to see the unemployment rate here in the U.S. going. So again, this is going to probably be the highlight for the week. When we move over and we start looking at the euro, we can see that the euro this week did start moving higher again. We've broken a potential downtrend on the RSI, and we've also seen the euro now move up to this level of resistance around 109. This is a really big level of resistance because if we clear this level, it can pave the way to move up towards 109.5, which could also pave the way to a much bigger move. Support levels at this point look like they're around 108.5 to around 108. But again, the trend looks like the momentum is signaling that there's potentially further to move up in the euro. When we swing over to the pound, we're looking at a pound that potentially has broken out now. This is the 128 area has served as very tough resistance now for some time. And now that we've broken out, I would expect this 128 area to serve as a meaningful level of support. Also, additionally, it looks like the pound probably has room to run up to around 131. When we're looking at the pound, you can see that the RSI is above 70 and we're above the upper Bollinger Band. So this could be an area where we see the pound consolidate some. When we look at the yen has been trending higher now for a couple of weeks. We can certainly see that after the CPI report, the yen saw a big move lower due to the fact that we had the weak inflation data, and also because the BOJ over there intervened in the FX market, helping the yen to strengthen. And that basically is what led to this move. Now we're sitting on this major support area with this trend line, and so a break of this uptrend would certainly be a negative, setting up a potential retest of this 156.30 area with the potential to even move down lower to 154.40. The obvious level of resistance comes around 161, which was the previous highs. Gold has gone on to make a new high, although we can see it's starting to get overbought here. With gold breaking out, we're probably looking at further gains. But again, this seems like a reasonable area to expect some consolidation just because we are getting to overbought levels. We'll just have to keep an eye. This level right in here around 2400 is a level that should serve as a meaningful level of support. And if this level were to break, that would potentially set up a retest to this 2330 area. Oil prices have actually started to move back down. You can see here that we're getting close to the lower Bollinger Band, and this would suggest that we're probably getting to a point where we could see oil consolidate some. Generally speaking, I thought oil would potentially be moving higher from here just because we had broken this meaningful downtrend. But again, this looks like a spot where we could see some consolidation. You can also see that this level right in here at this $80, $81 area has been an important level of support in the past. So if this level were to break, I would think that would mean further downside. But as long as this $80 area holds, I think oil can probably still move higher from here. The German DAX has been trending a little bit higher more recently, although it's been weak the last couple of days. So we're just keeping an eye. There seems to be this ascending megaphone pattern that's been in place now, and it's still in place. And that would indicate that we probably should find some support around this 18,390 area with the potential for it to move up to this 18,900 region. Again, we're sort of at a level where we're getting a little bit overbought with the Bollinger Bands, but the RSI suggests that we could continue to move higher. I think it's just a matter of keeping an eye on which side of the megaphone it's playing. Right now, it appears to be trending up towards the upper end of it, but I think, again, you just have to keep an eye of this 10-day exponential moving average, which has been serving as a support resistance level now for some time, you can see as well. The UK FTSE has been holding support at this 8,120 area. We're now back down below the 10-day exponential moving average, so we'll need to keep track of that. And clearly a break of support at 8,120 could send us back towards this area around 7,890. But really, until that happens, given some strength that we've been seeing in markets overall, we have to think that there's a chance here that we move back up towards this 8,250 to 8,300 region. When we move over to the Dow, a lot's changed in just a week. The last time we were talking about, maybe coming back up and retesting these highs, the Dow's had a pretty big move today. Most of that was really due to United Health, which had a big move up today, following its results rising by 6.5%. So that certainly has a big part in this. The problem is that we went from sort of being in this area here, which was middle ground, to being overextended now with an 81 reading on the RSI and well above the upper Bollinger Band. So again, this is an area where you need to be a little bit careful for further upside because, again, it looks like the Dow may have just ran too far too fast. And that sometimes happens, and that would maybe suggest we just consolidate sideways or look for some sort of maybe short-term pullback to the 10-day exponential moving average or so. And with the Dow moving higher, you're seeing that coming at the expense of things like the S&P and the Nasdaq. Today, the Nasdaq was only a little bit higher, so the Dow rose by 1.8%, and the Nasdaq rose by only 0.6%. And that you can see has just been kind of hugging this 10-day exponential moving average for some time. Again, the Nasdaq and the S&P were both extremely overbought. Nasdaq is still pretty overextended at this point, although it's come back some. The 20-day moving average is down here. Right now, the 10-day is probably the most important measure to watch because this has been the level that's been strong support. If for some reason you start seeing the Nasdaq breaking this 10-day, I would start looking for a drop back into this 19,720 area. And then finally, the SPX continues to just trend higher. A lot of the gains today came in the final hour or so of trading. You can see really starting around 245. We had just been treading water now the last couple of days. So we need to keep an eye on this. We've just barely cleared this level of resistance briefly, but before closing below it. So this is an important spot right here around 5,670. Again, when we look at the overall makeup here, I mean, it's overextended at a 76, and you have it also at the upper Bollinger Band. And every time we get these conditions, we tend to see some sort of consolidation. And again, I think that that's where we sort of are with many of these U.S. indices. They're just overextended, and they just move very quickly sometimes, and that makes it difficult to assess the next move. And certainly when things get overextended like this, it certainly warrants a little bit more caution. Anyway, have a great rest of your week, and we'll see you next. Bye.